Welcome back to QAV America. This is episode 42. We're recording this on the 3rd of March, Australian time, 2026. If you're brand new, welcome. We are two Australians talking about value investing. Tony's been a value investor for 30 odd years. We've been doing a show about value investing in Australia for 6 or 7 years. And now we do one on the American market as well, which we've been doing for a bit over a year. How are you today, TK?
Good. Punch drunk from all the movements in the markets over the weekend, or since the weekend.
Yeah. Well, obviously, crazy week. Middle East war is full on now, and it's got impacts, as of course, for investors. But for people that are new to QAV, what you should know is that we have a system, the QAV system that Tony's developed over his lifetime of investing, that has a bunch of rules that tell us what to do, when to buy, what to sell, when to sell. And it's at times like these that I think it having a system really makes it not I wouldn't say easy, but less stressful, because I don't have to try and predict where the market's going or what the market's doing. I don't have to think very hard at all, really, about it. As we've said through all of the cycles, we were just saying on the Australian show, since we've been doing the show, we had COVID, we had the boom that came out after COVID. We've had another crash that happened when interest rates started to go up all over the place, and the Ukraine invasion happened in 2022. Then we've had another boom period coming out of that in the last 8, 9 months. And through all of those cycles, the up and down cycles, the QAV system just tells us what to do. Buy, sell, hold. That's it. We don't have to worry about it. It just takes us
Yep.
through a step-by-step process of what to do, whether the market's going up or the market's going down or the market's going sideways. Me, as a relatively novice investor, don't need to worry about it. I just need to do what the rules tell me to do, which is a great relief.
When do you stop being a novice investor? Because you've been doing this for 6 years now.
When I catch up to you.
Is there like a bachelor degree and then
Yeah,
a master's degree and then a PhD? You're right.
I think so. I think
Hmm.
after 10 years, I'll
10
stop calling
years?
myself
Okay.
a novice. Yeah, yeah.
Because as you say,
Well,
you've been through plenty of cycles. That's usually the way that you test someone's experience in markets.
well, I've been doing Kung Fu for nearly 5 years. I don't have my black belt at Kung Fu yet. So I think,
Right.
I'm using that as my benchmark. When I get my black belt at Kung Fu, I'll be able to say, okay, well, that took me X
Yeah,
number of
okay.
years. And then I'll have the equivalent for a QAV black belt. I can be a black belt
Okay.
in QAV. But as I've told you
And,
before, at our Kung Fu school, when you get a black belt, it's just you've passed basic training. That's when
right.
the real training starts. So
Ah,
that's when you can, a bit like Scientology, you're like, okay, well, now you can go to the next level of QAV. You'll be able to tell me the secrets, the true secrets of.
and
But
what is your water bottle? What's it say in your water bottle at Kung Fu?
hold on while I overthink this.
Yeah.
Yeah.
Which is the
It also
important part of
says,
QAD, I think, too. Don't overthink things.
yeah. I also have a sticker on my Kung Fu water bottle that says a black belt is a white belt who never quit. And I think it's the same is true
Oh.
of investing.
Mm.
We were just talking about that. We've had members of our Australian QAV club that have been with us for 5 years, and they've been through a few cycles as well. And they know that if they just don't quit, the market turns around and things look great.
Mhm.
So obviously, let's get back to the war. So from an investing perspective, I'm trying to pay attention to what is this going to mean for things like oil and gas and gold, because we have investments in companies. We don't invest in resources directly with QAV, but we invest in a lot of companies that are involved in oil and gas and gold, among other resources. Also, in our US portfolio, we have a lot of companies that are transport of oil related,
Mm.
shipping companies, etc. So I was really interested to see what was going to happen with those stocks this week. And of course, the oil price is going up. Gas is going up a little bit, but oil is going up a lot. But if I look at the shipping stocks that we've got in the US portfolio, by the way, the US portfolio I've been running now since I think it was late 2023, September 2023. It's currently up 106% in that period versus the S&P 500 up 55%, slightly less than 55%. So we're doing almost double market over that period of time, which is 2.5 years, roughly. If I look at the last 30 days, our portfolio is up about 4% versus the S&P 500, which is down 1.3%. But we've got quite a few finance and shipping companies in the portfolio. ESEA, Euroseas, which is doing okay. I'm trying to just bring up its poor network connection. You still there?
Yeah,
Okay.
it's good down here.
Yeah. Euroseas has gone up since the weekend. It was trading at $61 as of the 23rd of February. It's now up at $70. So it's had a good week. What else have I got here? Sarkos Energy Navigation. Oh my God. It was trading at $30 on the 23rd of February. It's now at $37. Stealth Gas was trading at $8. It's now trading at $8.68, gone up a bit. So the shipping companies have done relatively well, surprisingly, with all of this. I would have thought with the Straits of Hormuz being shut down, we may have seen shipping companies getting battered, but for whatever reason, which I don't claim to understand, that hasn't kicked in yet. They're doing okay.
Yeah, I think the conventional reason, I don't know if it's the case now, is that if there's a blockage anywhere in the world of shipping and it means ships have to travel longer, they basically charge more.
Okay,
They're
right.
in like a revenue per mile type cost structure or fee structure. So that's one of the reasons, I think.
I'll tell you what hasn't done well in the last week is some of our Korean stocks. Korea Electric Power. We talked a lot about ADRs and the implications, complications of ADRs last week. Korea Electric Power has dropped from $22 down to 1966 in the last week. KT, which is Korea Telecom, has also slid a little bit from $24.50 down to $23.50. Not sure what's going on with them. And in our QAV light portfolio, this is a classic. So do you remember last week I did a deep dive on Bread Financial Holdings?
Yes.
But I said that as I was preparing for that, I was going to add them to our QAV light portfolio, but then noticed that they were what we call a Josephine. The share price was going backwards. So I said I'd have to find something else to buy. So I bought a company called EW Scripps Co., a diversified media enterprise, ticker code SSP. They were the next on the buy list last week. They went up 20% last week after I bought them. I was like, yeah, that's very nice. Thank you for that. They've dropped back to, they're up 11% since then. But yeah, they came out with an announcement late last week with their Q4 revenue that said that Q4 revenue fell 23%, but the share price still went up. I think they sold a station, WFTX, a Fox affiliated station in Fort Myers, Florida, for $40 million, which they said they were going to use to pay down debt and strengthen their balance sheet. So that may have helped. Whatever reason, it came out good. But also, I've had a few things I had to sell today. Well, one thing actually I had to sell today. VLRS, we did a deep dive on them not that long ago. Controladora Vuela Compañía de Aviación. They are a like budget airline
That's right.
out,
Yeah.
out of Latin America. Well, they've not had a good week. It's been a bit of a disaster for the poor Mexicans. I don't know if you've been reading about this in the news, but there was some drug lord that was executed, El Mencho. Nemesio El Mencho Oseguera Cervantes, the leader of the CJNG drug cartel, was killed by the Mexican army or by Donald Trump, depending on who you believe. I think he took credit for it. And there's been a lot of trouble in Mexico as a result. It's become a bit of a no-fly zone. Between February 23rd and 24th, over 175 flights were cancelled nationwide. Volaris's primary hubs were the hardest hit. Guadalajara saw a 76% cancellation rate. Puerto Vallarta had a 62% cancellation rate. And this is happening right before the 2026 spring break season, which is March 8th to March 22nd. 20,000 passengers stranded in 48 hours. The market is pricing in a massive hit. So that happened. Then they had a bit of an earnings bloodbath. Volaris reported an EPS of 4 cents, which missed the consensus estimate of 27 cents by a bit.
By what?
I saw somebody posted on a Facebook page or Reddit or something the other day saying, does anyone still say that? Missed it by that much. They said that at work recently, and the person they said it to is like a Gen Zer looked at them like,
Oh,
what?
really?
Yeah.
Oh, no.
You're officially old if you do get smart lines, I think.
Yeah.
So yes, their results weren't great, and then their 2026 guidance wasn't good. They're still dealing with engine problems, et cetera, et cetera. So anyway, a lot of problems.
And airline stocks all around the world are decreasing at the moment because the oil price is going up.
Exactly. And we did talk about the Pratt & Whitney engine groundings when I did the deep dive on them. So anyway, the bottom line is I had to sell VLRS. They were a 3-point trend line sell. But the thing is, we do have rules that tell us what to sell and when to sell it. This triggered one of those rules, so I sold it. And I replaced it with a company that we talked about a long time ago on the show, Danaos, DAC, which is a Greek shipping company. And its share price has already gone up as a result of the Middle East crisis, jumped from $108 last week to $118 today. But yeah, so I added that to our light portfolio this morning. Danaos is a holding company and an international owner of container ships, chartering its vessels to a range of liner companies. The company's principal business is the acquisition and operation of vessels, conducts its operations through the vessel-owning companies, whose principal activity is the ownership and operation of container ships that are under the management of a related party of the company. They have 50 container ships aggregating approximately 329,590 20-foot equivalent units, TEUs. I remember when we talked about TEUs back on the show.
The backbone of world commerce.
Yeah. So that happened. But that's not the company I'm going to be doing the deep dive on today.
Well, golly, why not?
Thank you for that reveal, the sneak reveal. The company that I'm talking about today is Nabors Industries. No, not owned by Jim Nabors from whatever that show was. What was that show? Do you remember?
Gamma Pile USMC. You
That
think
wasn't
Get
the name of the
Smart
show, was
dates
it?
you. Yeah, you think Get Smart dates you.
Yeah. Well, golly.
Golly, Sarge, golly. I'll
Na-
your stuff in.
Nabors Industries. Um, it's a 74-year-old drilling giant that has spent the last decade acting more like a distressed debt workout than an oilfield service company. But they're a global oil and gas drilling contractor based in Houston, Texas. They own the world's second largest land drilling rig fleet, with over 250 rigs operating in 20 countries. But has an interesting story, as I mentioned to you off air. Ow, oh, 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 cramp,
What,
cramp.
while you're fixing your cramp, I was just checking with ChatGPT about a rumor I'd heard about Jim Nabors that he was actually secretly married to Rock Hudson. But according to ChatGPT, that rumor isn't true.
Well, that's disappointing to hear.
It is. Golly.
Oh, that was a
Shazam,
bad,
Shazam, Shazam.
it's a bad cramp. Oh. So Neighbours Drilling goes back to 1952. Claire Neighbours.
Black and white.
Yeah.
Yeah.
I think this is a big thing in Texas. You give girls names. Claire Neighbours. Grew from a small West Texas shop into the world's largest land drilling contractor. But the roots of this business actually go back further than that. Goes back to the Guggenheim family and their business interests in South America. Now, I knew nothing about the Guggenheims. I mean, I've been to the Guggenheim, and I've been to when we were in LA a couple of years ago. We went to the villa, which is a recreation of the villa that was owned by Julius Caesar's father-in-law, Lucius Calpurnius Piso, which is the villa where they found the papyri that were destroyed when the volcano went up. It's the villa at Herculaneum. You know, the villa of the papyri? Anyway.
No, I haven't.
You haven't? You don't listen to my podcasts about that time?
I do, but not for a long time.
When the volcano off of Naples erupted in 79 CE, Herculaneum was like a resort city not far from that sort of area.
Yeah.
And about late 19th century, some guys were digging around there and they came across a hole in the ground, and they pulled out these little bits of things that they thought were just charcoal, and they started throwing them on the fire until one of them cracked open and they saw writing on the inside of it.
Oh.
So it turned out that Julius Caesar's, they think it was Julius Caesar's father-in-law, Calpurnius Piso, that had a villa, and he had a massive library, and these books were destroyed after the eruption, but they were they were scrolls that are burnt on the outside but survive on the inside, but you can't open them up without destroying them. But what they've been doing in the last couple of years is this non-destructive laser scanning that can go through them and read page by page the writing that's on there, and then use computers and AI to reconstruct it.
Wow.
And we're discovering these books that were in this library in 79 CE. It's amazing. It's called The Valor of the Papyri. Look it up. It's fascinating. But anyway, or listen to my podcast on it. But so getting out of that, the Guggenheims, Meyer Guggenheim was a Swiss citizen of Ashkenazi Jewish ancestry, arrived in the United States in 1847. Surname comes from the Alsatian village of Guggenheim. He met a woman called Barbara Meyer, who he married in the United States. And over the next few decades, they had 11 children, and descendants became known for operating businesses in the mining and smelting sectors, Guggenheim Exploration, and they had a company called the American Smelting and Refining Company. And then in 1882, with 7 of his sons, he organized the M. Guggenheim's Sons, later reorganized as the Guggenheim Brothers. And in the early 20th century, they had one of the largest fortunes in the world. And in 1912, they organized the Chile Exploration Company, Chilex, and bought the Chuquicamata open pit copper mine. It's now the largest open pit copper mine in terms of excavated volume in the world. But the story behind that is interesting. So, an American engineer named Charles Bradley developed a method of processing low grade oxidized copper ores. Guggenheim's sort of got control of that process, and following World War One, they sold this all off. But before that, they sort of just went around and bought these like low grade copper mines in Chile and built it up to be quite huge. But then sold out of that and bought nitrate mines. They got into fertilizers and explosives after World War One. They sold the copper mine to Anaconda Copper in 1923, which of course led me down a rabbit hole of Blue Horseshoe loves Anacott Steel. Yeah. It's not Anacott Steel, it's Anaconda Copper.
Mm-hmm. And there was a company listed on the Australian ASX called Anaconda Nickel for a while.
Right. I think we've made gags about that in the past. In 1924, they used the profits of the sale of the Chuquicamata copper mine to purchase Anglo-Chilean Nitrate and Railways Company Limited, which was a British business. Bought a bunch of other things, amalgamated it all into this big nitrate corporation. And then in 1931, they partnered with the Chilean government to form COSACH, the Compañía de Salitre de Chile, $375 million behemoth that controlled nearly the entire natural nitrate supply of the planet.
Wow.
They cornered the market for nitrates. Fertilizer and explosives, yeah.
Mm.
Which was, a big deal. Unfortunately for them, they underestimated the Germans. Never underestimate the Germans, Tony. While they were digging nitrate out of the ground, German chemists, Aber Bosch, figured out how to create it directly out of the air and create synthetic nitrates. And then there was a price war. The synthetic nitrates were becoming cheaper and easier to produce. The monopoly that they had of digging it out of the ground wasn't as valuable as it once was. Great Depression hit in 1929. Global demand for fertilizer collapsed. The Guggenheims were left holding a mountain of debt. They ran the companies separately until 1950, until they merged them into the Anglo-Lautaro Nitrate Corporation Limited. And then Salvador Allende took over Chile and nationalized the nitrate industry. They were forced to sell all of their assets to the government in 1971. The government paid them $7,885,590, which resulted in a $25,912,956 loss for the company. The historian Erwin Unger, who wrote a bio on the family, summed up the family's nitrate operation, saying, all told, the nitrate venture had been a disappointment and it diminished the family's role in the world of business. The Guggenheims soon ceased to be industrial movers and shakers and became known to the public primarily as patrons of the arts and sciences. So there you go. So,
and the link with Nabors building.
Get into that.
Oh, okay.
Yeah.
Well, then the earth cooled and
Yeah. Dinosaurs. Yeah.
dinosaurs roamed around. Yeah.
Come on. It's Guggenheims. You learned something.
I
So,
did.
after they got out of the nitrate business, they reorganized what was left into a new company, the Anglo Company Limited, incorporated in the Bahamas. Throughout the 70s, they acquired a number of companies, including Nabors Drilling.
Is this related to, like, there's an Anglo company now, a big mining company around the world, which in Australia has Anglo Gold Ashanti and various other companies.
I don't think so, because Anglo went into work in oil exploration. Then the 1980s oil glut began and Anglo went into bankruptcy,
Oh, okay.
came out of Chapter 11 in 1988. Then it purchased a Canadian drilling and supply company, Westburn Group, and then changed its name to Nabors Industries Incorporated in 1989. So I think anything that it owns is probably under the Nabors parent
Okay.
now, but I
Yep.
mean, it may still have businesses called Anglo. I didn't go into that
I
in any
thought they were
detail.
South African based, the Anglo mines, but I
Right.
could be wrong.
So they started acquiring drilling and drilling equipment companies. In 1991, a guy called Anthony Petrello was hired, became deputy chairman, president, and chief operating officer. Previous to that, he'd been the managing director of the New York office of law firm Baker and McKenzie. And then 20 years later, when the Nabors CEO, Eugene Eisenberg, stepped down, Petrello became the CEO, and he's still the CEO today. So he's been running the company as either president, chief operating officer, or CEO since 1991.
Wow.
Only owns about 3% of the company, though, which is
It's surprising.
interesting. Yeah.
Yeah.
I mean, it's a big company, and it has a lot of institutional investors.
Right.
In 2016, they signed a contract with Saudi Aramco, the largest oil company in the world, to form a joint venture called SANAD, SANAD, the Saudi Aramco Nabors Drilling Company. Commenced operations in 2017, and that's a big deal. But they've got a lot of their businesses tied up in that, as we'll get into when I break down the numbers in a minute. Institutional investors own about 75% of the company. And they're basically a general contractor today in the oil patch. They don't own the oil, they just provide lots of rigs to get the oil out of the ground, labor, a lot of high tech stuff. We've covered companies like this on the podcast over the last year or so. It's a big business. We run the rig, we run the teams, you own the land with the oil. We just come in and get it up and running. You can get up to speed quickly. You can shut it down quickly. They can move their stuff around to other contracts, all that sort of stuff that we've talked about in the past. They got three main segments: the US and international drilling. This is the bread and butter of the business. They operate a fleet of 158 rigs globally with a massive footprint in Saudi Arabia. About 79% of their revenue comes out of drilling, 30% in the US, 49% international. They have something called Drilling Solutions, which is the high margin software and automation that helps them drill with fewer people. That's about 16% of rev. And then something called Rig Technologies, which is the factory. They build and sell rig components to themselves and to competitors. That's about 5% of revenue. I was looking into why it's cheap. Dirty stories and risks. There's always a dirty story involved in these American companies, we've learnt over the last year or so. Nothing really recent in their history. There was a really nasty sexual harassment case on a rig about a decade ago, 2014, of a man who was like accused of being homosexual by his colleagues, and he
So
ended up.
he thought about Neighbours the same way I thought about Neighbours.
They accused him of being married to Rock Hudson,
Yeah.
and he took him to court. It was a big deal, actually, that I believe changed some regulatory stuff I think it was in California, where it was a man that was getting sexually harassed by other men who were accusing him of being a homosexual, even though they knew full well he wasn't. They'd met his girlfriend even before he started working there. But it was just, you're a fag and you're gay and all this kind of stuff, and constant harassment and photos of him. And I read the story on it. It was like sort of what they put down to a roughneck culture, but it blew up, and I think there were regulatory changes around it. I think before then it was assumed by the courts that only women could be sexually harassed by men in the workplace. They've also been a serial diluter. A serial diluter. That's a good one. A serial diluter. They've diluted their what do you call it? Their
Shareholders.
Shareholders, yeah. I was thinking of something else. Share count grew by 52.8% in the past year alone, but it's an interesting story to this, which I'll get into in a second. It was regarding an acquisition. The only other thing I could come up with about them that is sort of high risk is that 30% of their 2025 revenue came from Saudi Aramco. So if there's any problem with that, it could be a big chunk of their revenue, but Saudis are doing okay from what I heard.
Yeah. They seem pretty switched on, don't they? Especially in the oil space.
Yeah. I hear they may have had something to do with the Iran strike. I read it in the New York Times, Tony. That's all I'm saying. I saw some suggestion that there may have been a late night phone call to Donald Trump's golden toilet from an unnamed prince of the realm.
It's a funny old world we live in, isn't it? Really?
Yeah. So, and the acquisition I mentioned last year, about a year ago, March 2025, they bought a company called Parker Wellbore for $180 million or thereabouts. They're a leading rental provider for downhole tubulars. Tony?
Okay.
You ever I had a downhole tubular once. Had to go see a doctor. He said, look, it's a day procedure. Don't worry about it. Downhole tubulars are cylindrical steel pipes used in oil and gas wells. That's what they sound like. Tubes that go down holes.
Downhole, yeah. Exactly.
But they didn't have the cash to buy Parker Wellbore. So they issued equity for it. And the CEO, Tony Petrello, is basically pitching this as a master stroke of financial engineering. So what he did was he issued 4.8 million new common shares directly to Parker's stockholders to take over the company. And he had about 9 million shares outstanding at the time. So that added sort of 53% roughly to the shares outstanding. But then he immediately turned around and sold one of their divisions called Quail Tools for $625 million. So he bought it for $180 million worth of shares.
Oh, that is a good deal.
Sold Quail Tools for $625 million.
That's a great deal.
Makes you wonder why the people at Parker Wellbore didn't sell Quail Tools for $625 million. I didn't get into that, but he used that $625 million to pay down their debt. So he said, we effectively sold equity to fund the Parker acquisition at approximately $130 per share, a very significant premium to the then current stock price. So basically using Yeah, you could just basically print free money by printing shares, buy it, and then paid down $554 million in debt. So it sucks if you were a shareholder, you got diluted,
Yep.
but they pay down the debt and they're going to save roughly $40 to $50 million a year in interest payments.
Mm-hmm.
So,
So he could have issued shares to his own shareholders and then paid down the debt. That would also have worked.
yeah, but then he wouldn't have had the Parker Wellbore downhole tubular business
True.
to show for it.
And he couldn't have sold Quail Tools. But with all that round robin, same result.
Hey, listen, I'm not going to
Mm.
argue with Tony Petrello on how much of a masterstroke
No,
of financial engineering this was, Tony. Looks pretty impressive on paper.
sounds good.
Anyway, their market cap's about 1.14 billion, but they're carrying debt of 1.55 billion still, down from over like 2 billion until they did this deal. So, balance sheet is not exactly pristine, but they've also pushed their next major maturity out to 2029, so they got a little bit of runway before they need to worry about it. That's basically the basics of the business. It's kind of a bit of a cigar butt turnaround here, but
Mhm.
they've sort of stripped a lot of stuff back over the years. They've really just got this drilling business. But if I get through the financials on it, their EPS is $17, but it's not really. Um, it's really more like negative something because I think that's all from the sale of the business, extraordinary items they got
Okay.
from flipping Quail Tools.
Right.
The TTM EPS is actually sort of minus $5. And analysts are calling for a minus $4.60 EPS for next year. So, but they're investing all of that money.
I thought you
They're
said they were
not.
paying down debt.
They paid down debt from what they sold it.
Yep.
Yeah, but they kept some.
Oh, okay.
They sold 600. They sold it for 650 million, and they paid down 554 million
Okay.
dollars in debt, and used the rest to stick into the business. Right, 100 million roughly. They're losing money, but they're investing it in buying stuff, basically. Their price to operating cash flow is 1.65.
Mm.
So you're paying $1.14 billion for a company that generated 693 million in operating cash flow over the last year. A lot of raw cash generating power in these oil rigs that they've
Yeah.
got in Saudi Arabia, among other places. So it's got a price to book of 1.93. The book value growth CAGR is 17% over the last 3 years. So they're aggressively building the asset base through acquisitions that really isn't showing up in the valuation of the business yet. The Petrovsky F score is a 7 out of 9, which is very good. The stock rank in Stockopedia is a 94.
Mm.
So that's very, very strong. The free cash flow, though, if you look at it, is despite the operating cash flow of 693 million, the free cash flow is negative 22.6 million because they're pouring every cent that they have back into capex, probably
Yep.
these rigs that they're throwing up in Saudi Arabia. So they're spending everything that they've got and then some, having to buy stuff, sell stuff to keep the plates spinning. It's sort of an asset-rich zombie. Looks like
Yeah.
it's losing money, but it's got a lot of assets and is generating a lot of cash flow. It's just spending more than it's making.
And the risk is with any drilling company is that if there's a downturn in the oil market, then they're stranded holding all these oil rigs they can't rent out.
Well, thank goodness they have Benjamin Netanyahu on speed dial. Because I
Uh-huh.
think the oil price is going to be doing okay for a little while.
Yeah. Yep. That's that's how large US companies risk mitigate, isn't
Let's go blow something up.
it?
No, I have no evidence to back up the fact that they have Bibi Netanyahu on speed dial, but the current goings on in the Middle East are probably good for the oil price for
Helping,
the
yeah.
foreseeable future. So that's basically the Nabors Industries story, Tony, from the Guggenheims through to Saudi Arabia, Jewish mining company through to building oil wells for the Arabs. Let me go through the scoring. Price to operating cash flow, as I said, 1.65. Quality rank and Stockopedia 58. Didn't score them for that. We only score them if they're over 60. But they got a score for the stock rank above 90. F scores above 4.5. Scored them for that. The price is higher than both our IV1 and our IV2. It's also higher than book and book plus 30. Doesn't have a new upturn. Book value growth is positive. As I said, the PE is nothing because they're not making any money. So the yield is nothing. The price, their IV is IV number 2 is not better than their IV is not better than double the share price. IV number 2. So when I scored them on the QAV score and they got a score of 7 out of 10, 70%. And a QAV score, though, of 0.43, due primarily to their very, very attractive price to operating cash flow. So, oil miner rig business. Tony, that's really it. That's all I got for these guys. Not owned by Jim Nabors. They're not married to Rock Hudson.
Rock Hudson.
But
interesting, isn't
cheap.
it? I mean, it's cheap. That's the biggest thing going for it, throwing off lots of operating cash.
Yeah.
But heavily indebted in an industry which will be doing good for a while, but whether it continues doing good long term, who knows? The Saudis have been for years trying to develop other industries. The day when oil is in decline, so that they could be 10 years away or 20 years away, no one knows, or it may never come. So yeah, there's a fair bit of risk with this company, heavily indebted, renting out oil rigs, which one day may not be needed. But until then, running as fast as it can to fix up its balance sheet and become profitable again.
And we don't forecast the future.
Unfortunately not.
Yeah.
Yeah.
So I added them to our QAV Lite portfolio yesterday, and we'll see how they go.
Well, we're worse at forecasting the future than Maga My Man is. Put it that way.
So in our last show, we talked about Maga My Man and the PolyMarket scandal. There was somebody who was making lots of bets on PolyMarket about when Israel and the United States would attack Iran and when the Ayatollah would be killed, and managed somehow to get them all right and made a huge profit off it.
They should open a market as to who the real identity of Maga My Man is.
I'm sure that's on there. I'm sure it is.
Yeah.
I did see, and we talked about in the last show, somebody pointed out that Donald Trump Jr. is on the board of PolyMarket and has invested many, many millions of dollars into it, and may or may not have an account under a pseudonym on there trading on information, but apparently that's all legal and above board in the United States.
We should put up a honey trap, set up a market for who Maga My Man really is, and when that person bets the house, we'll go, aha, gotcha.
By the way, speaking of the Light portfolio, we've only been running it for I've been running it for a couple of months. Let's see, it started this one December, latest 22nd of December. But bought the first shares in it. It's down about 2.5% versus the S&P, which is basically neutral in that period of time. But some of the stocks, I talked about having to sell VLRS, but Cord Energy, which we only added a couple of weeks ago. End of January, we added Cord Energy. Their independent exploration and production company. It's up 18.6% since we added at the end of January. As I said, SSP is up 11%, was up 20, now up 11. The rest of them are just trundling along. Tusk, Mammoth Energy Services, we talked about, it's up 1%. Eco Petrol is up, is down 1%. And Shinhan Financial is down 6%. SHG, the other Korean one that we talked about. And Nabors Industries has actually dropped 1.5% after I added it yesterday. So if you haven't already added it to your portfolio, maybe just watch and see what happens. Wait until it turns around again, which it may or may not do. And if it doesn't, we will sell it and replace it with something else.
Correct.
But as we know, it does take time for these portfolios to
It does.
establish themselves.
Yeah, it does. We get outperformance, but you just have to wait for it to ramp up, don't you? Yeah, and as even Warren Buffett says, 6 out of 10 in terms of stock picks and getting them right is a good score.
Yeah.
So we might churn for a bit until something takes off.
Yeah, well, what I found over the 6 or 7 years that I've been doing it with you is that when we start a new portfolio, there's moving pieces. It's like what do you call it? The chairs game that kids play, dancing chairs, moving chairs.
Pass the parcel.
No, not that one. The one where you have to get off a chair and go sit on another chair. Whatever that kid's game is. Obviously, a long time since I hosted a kid's birthday party. We have to move the pieces around. We'll buy a couple of companies and they won't work out and they'll breach one of our sell triggers and then we'll buy the next one. Before you end up with a good stable portfolio of stocks, we get rid of the duds as they fail and just keep adding companies until we have a portfolio of mostly winners. Then you end up with your 15 to 20 winners and they generally do well. You'll have to sell one or occasionally every now and again, but once you get a portfolio of 15 to 20 good companies, they just get a lot of wind in the sails and keep running for a very long time.
It is something we've seen time and time again, isn't it? Whenever we start a new light portfolio or dummy portfolio, it just takes a bit of time. Even with the US one, I remember it was underperforming for its initial stages.
No, on the contrary, it kind of did okay. So I started the main US one, as I said, in September 23. It tracked along for 3 or 4 months and it dipped down a little bit for a while, for a couple of months. Then it tracked along. It got back to neutral for a couple of months. Then by July 2024, so that's 8 or 9 months, it went bonkers. By November 2024, it was doing triple market. It was up 90% when the market was up 30%. Then Trump got elected and it gave up a lot of its returns. By November last year, it was back to basically neutral to the S&P 500, up 52%, but tracking the S&P. And then it's doubled since then in the last 3 months, 4 months. So yeah, it's had a couple of cycles just in the 2.5 years we've been running it. It's crazy, but yeah. Anywho, there you go. We just follow the system, follow the rules. And for new people listening to this, as I was saying to one of our new members when I had a call with her this morning, the basic thesis behind QAV I always explain is we look for companies that are performing well, generating cash, seem to be well run, and we buy them when we can get them at a discount. Correct. And then we hold them for as long as we possibly can and wait for the market to catch up. We have rules in place that'll tell us if we have to sell them. But they're very, very strict rules, and there's only a couple of them. And generally, we just try and hold them as long as we can and wait for the market to agree with us that it was undervalued in the first place. And more often than not, that works out.
Yeah. Or the company's taken over and somebody else sees value in it. All those kinds of things happen too.
Yeah. Yeah. If you find a well-run business and you can buy it cheap, more often than not, that turns out to be a good investment. It's not
Yep.
rocket science. It's not quantum mechanics, is what I always say to people, right?
Yeah, exactly. You don't need to know the ins and outs of the drilling industry in Saudi Arabia to be able to do this.
Yeah. Is it making money and is it cheap?
Mm.
And that's pretty much 90% of what you need to know.
It's a bit like buying cars, isn't it? Right? Can I drive this on the road? Is it a good price? Is it reliable? Okay, I'm going to buy it and drive it until I have to sell it.
Yeah.
Yeah.
But as I said to this new member this morning, like, I think to give you your due, your stroke of genius was figuring out how to take something that's relatively amorphous for most of us, like value or investing, let alone value investing, and reducing it down to a relatively simple algorithm.
A checklist.
A checklist, yeah, which says, look at these 20 things and score it. And if it has a good score, buy it.
Yep.
Which,
no, exactly.
Which makes it doable for those of us
Yeah.
that don't have your head for numbers or math or whatever it is that makes you weird.
Thank you, I think.
It's a compliment. As I said to Maria, our new member this morning, I said, Tony's a nerd, and lucky for us, he took his nerdiness and turned it into something that we can all use. The Einstein of value investing. That's what I like to call you. This is your QAV is your E equals MC squared.
Right. I don't know what to say about that. I don't think it is, but anyway, it works.
It does work, yeah. So does E equals MC squared.
More of the Chevrolet of investing. It's
just works.
Paired back and it works. You can drive it every day. Yeah, don't have to think about it. Get you to work. Get you to
No. You did good, TK. You did good. All right. Well, that's the show. Okay. Thank you, TK. You can go play golf. I'm going to Kung Fu.
Go back and watch some Game of Pile USMC.
See ya.
Shazam. Yeah.